Be Wealthy and Smart, episode 1556.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about two inflation reports that are due out this week. Now, this is important because the Fed is using this information to look closely at inflation, which has been running at about 2.9%. As we all know, that's above the Fed's target rate of 2% inflation. And with them meeting this month and all the speculation that they're going to reduce interest rates by 0.25%, this information is very timely. As of today, traders have predicted an 88% chance of that 0.25% rate cut at the September 17th Fed meeting. The Fed and investors await those critical inflation reports this week for more insights into the health of the economy, especially after we had weaker than expected hiring data on Friday. If you remember, the jobs number came in much below expectations, and that helped fuel investor hope that the Federal Reserve is pretty certain to lower interest rates at their meeting. Traders also believe that there may be a 0.5% rate cut at the meeting. The odds of that have gone up. Morgan Stanley strategist Michael Wilson said, "The weak jobs report supports our view that we're transitioning to early cycle from rolling recession to rolling recovery. Near-term risk is tied to whether the monetary policy response is significant enough. Potential choppiness in the short term could set up for a strong finish into both year-end and 2026. I happen to agree with him. I think we're going to have some choppiness later this month, but that is going to launch us into a huge bull market in the fourth quarter for stocks, bonds, real estate, and crypto. So what are the two critical inflation reports that are coming out this week? Well, we have the Producer Price Index report for August. That's due out Wednesday. And the Consumer Price Index is coming out on Thursday. The Producer Price Index, or the PPI, measures the average changes over time in the selling prices received by domestic producers for their output, which reflects inflation at the wholesale level. It's considered a leading indicator for changes in the Consumer Price Index and helps businesses and economists understand the price pressures throughout the supply chain by tracking costs of raw materials and manufactured goods. Whereas the Consumer Price Index measures the average change over time in prices paid by urban consumers for a market basket of goods and services, and that makes it a key indicator of inflation. The Bureau of Labor Statistics tracks price changes in categories like food, housing, apparel, transportation, and medical care. So it really is measuring the cost of living. I think most people feel at this point it's a foregone conclusion that we'll get at least a 0.25% cut in interest rates. And the weak jobs data is what is allowing that to happen because inflation is remaining a little bit sticky. So these inflation reports may come in higher, but the weaker jobs report still may give the Fed the room to cut interest rates. So we'll have to see how that goes and report back to you after that meeting. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.